Welcome back, traders, to Tom Crown, World Champion of Technical Analysis, where you subscribe for our daily cryptocurrency technical analysis videos covering your favorite coins, your favorite topics, and everything going on in the crypto market. We're going to be reviewing 3 coins. We're going to start off with the macro view on Bitcoin, what's in the future for Ethereum, and one spicy altcoin that's ready to make moves. So don't forget to smash those likes and subscribe buttons, check out the links in the video description below, and let's get into the content. With only a few days left in the trading year, Bitcoin is hovering around 50K, a likely uncomfortable price for most of the viewers out there. Where is our end of year Santa rally? Is it too late for the yearly candle to close higher, or are we just being impatient? Opening 2021 at just under $29,000, Bitcoin has traded as high as $69,000, is looking to settle up around 49 or 50K. With lackluster price action into the end of this year, Crypto Fear and Greed Index shows us a telling story. Starting the year in extreme greed, we saw that fall off into the May crash. Since the recovery in July, we've seen 2 spikes back into the greed zone. And into November and December, we're seeing a familiar pattern. Sentiment has reached new lows despite the chart not putting in new lows. On this channel, we've invented something called sentiment divergence. This is when sentiment disconnects from price. The price lows in September pushed fear and greed down into extreme fear again. However, in December, we've seen even lower ratings, which suggests sentiment is even more negative than in September, despite price not reaching a new low. It is taking less downward price action to make people bearish. In my opinion, this is a bullish sign. Our indicators on Bitcoin for the monthly time frame are not really showing us signs of strength yet. Our MACD, RSI, and Market Cipher are all still leaning slightly bearish with only a few trading days to go. One of our favorite tools suggests that this rally is still intact. The Ichimoku Cloud Indicator stands out as the single bullish note on the monthly chart. Our green line right here is called the TK and is a very reliable signal of our trend. While 49,000 would be a very boring close to the end of this year, it would remain above the TK and thus suggest that the monthly chart is still in an uptrend. Looking back at the last few years, we've only closed 2 monthly candles beneath this TK. The previous 2017 bull cycle showed a very tight correlation between price action on the monthly closing above the TK and continuing the upward trend. In January of 2018, the monthly closed below the Kaijun purple line, and this signaled the end of the bull run. Price was stuck below both lines until 2019, where it failed to retake the KJ, capitulated in March, and in April closed above both, signaling it was time for the bulls to take control. As long as our monthly candle closes above 36,400, we do not see the same bearish pattern. Heavy resistance does sit above us at 58,800. The weekly chart shows signs of hope even into the end of this year. Our lows in September and November painted higher lows. RSI has reached lower in November than September, despite price failing to do the same. On a weekly time frame, this can be viewed as a very strong bullish signal. This signal is likely confirmed with a weekly close in the next 3 days higher than 50,000. This would give us the same bullish engulfing candle on the weekly that we saw in September, and combined with our bullish divergence on RSI would be a great signal that long is the trade. Our Fibonacci extension tool from August's high to September's low, our 2 or measured move extension sat at 70,800. Price came just shy of this value. If we use this tool again from November's high to November's low, our measured move target suggests that on a break of 69,000, price discovery may push Bitcoin to as high as 112,000. For those of you uncomfortable in your Bitcoin position, the smart play here is to wait for a bounce somewhere in our golden pocket, starting at 57,200, we see our 618 retrace sits just below quarterly and monthly resistances. In my opinion, the probability of Bitcoin retracing to this level is very good. Just as I suggested to all of you back in May, June, July, and September, if you are uncomfortable, wait for the bounce. Don't panic trade. Zoomed into the daily, our bullish divergence on RSI is visible again. Just by visually examining these lows, we can see similarities between the two. Both swing lows started with a heavy wicked candle and then what looks like very ugly consolidation. We have another Tom Crown original trading edge. On the daily, we see the 20 white moving average and the 200 daily green moving average. Similarly to September, the 20 fell towards the 200 before price rallied or rejected that cross, pushing the 20 back up. Price then fell again, pulling the 20 down, threatening a death cross. We may see a bullish kissing. The 20 is threatening the 200 with a death cross. In the nick of time, price seems to be finding buyers. Today's daily candle briefly traded below the 20 and is now looking to paint a strong bullish hammer. A move back to the golden pocket retrace is likely to complete our bullish kissing, with the 20 beginning to curl up and reject. We have seen this exact pattern play out with the weekly and daily condition leaning bullish. It would not surprise me to see the end of this year get really spicy. To sum up Bitcoin's chart, I believe we are watching our favorite pattern play out. That is a flat-topped resistance met with multiple higher lows, creating an ascending low trend that statistically favors a break to the upside. My bullishness hasn't been phased. It's just a matter of time until we start ripping. Ethereum on the monthly has had an impressive 2021, starting its rally in early January, breaking its all-time high. Ethereum pushed all the way to 4,400 before retracing back to the $1,700 area. As Bitcoin recovered in July, we saw Ethereum push past monthly resistance, backtest it in September, and explore new heights in October. This is a solid technical chart, as Ethereum has consistently established resistance, broken it, and backtested it as support. With a few days left in the year, Ethereum's monthly candle is certainly not the prettiest. After trading down to 3,500 this month, coming just shy of 3,400, the previous monthly resistance, Ethereum has a very possible threat of closing a bearish engulfing monthly candle. A close above 4,290 would remove this threat and set Ethereum up for a solid 2022. Zoomed into the weekly, Ethereum has a rather pretty chart. Weekly resistance at 3,928 has been tested multiple times, but has held on each attempt. We have a flat-topped resistance with ascending lows that led to a breakout and now a possible back test of resistance as support. Holding 3,928 into this weekly close possibly set Ethereum up for another run and price exploration. We see our 1,618 and 2 measured move sitting at 5,900 and 6,600. These targets are very probable, provided 3,928 holds into the close of this year. Markets move in both directions. Each rally is met with profit taking and selling. We can see this clearly defined on Ethereum 3 times this year. A positive sign in my eyes is each selling event has been less intense than the previous. When selling pressure fails to accelerate, this is often a signal of exhaustion. Like Bitcoin, Ethereum faces hurdles to the upside. I believe the top is not in for Ethereum yet. Into the end of this year and possibly 2022's Q1, I'm going to be looking for farther upside on Ethereum provided our important support levels hold. This would complete our pattern and would be the logical move for Ethereum. To wrap up today's episode, we're going to be taking a look at Matic, our spicy altcoin of the day. You may have seen our video released in November on this very coin. We were looking for an upside of $2.50 and a retest of the all-time high at $2.90. Matic since has retraced, bounced off of our $1.86 support, and has reached to new heights in December. So far, the TA has been respected, and nothing has changed on this chart. Zoomed out, we see the pattern that we're hoping to see on Bitcoin into the end of this year. Our flat-topped resistance sitting at about $2.43, with a series of ascending lows. This chart is looking exceptionally strong into the 2021 close, and our same targets are still in play. Using our Fibonacci extension tool, we use the May swing high to July swing low, and that points us to $7.50. This is a comfortable target for me and Matic on a break of the previous all-time high. While I do expect some profit taking to take place at $2.89, I don't believe that that will be the end of its rally. It may consolidate sideways, and there's always that possibility of a break straight to the upside. This chart reminds me a lot of Ethereum, and if it follows the same course, may look to break out possibly to a $5 psychological level before pulling back to $2.90, testing it as support and finishing off that move. This would be an extremely healthy and bullish path for Matic to take to new all-time highs. As always, I never recommend FOMO trading. Jumping into green candles is not a good idea. In this case, it's going to be difficult to spot an entry. Trading below $1.70 possibly invalidates the pattern we're looking for here. A test of $2.43 may provide an entry for a risk-on trader. The more patient trader may look for that break and re-entry at the previous all-time high on a pullback. Either way, Matic is looking beast, and it is a hella spicy chart. Thank you for everyone who made it the whole way through this episode. Happy holidays, guys. Happy trades. Crown out.